This is Austin Real Estate Investing.
Austin Real Estate Investing.
We'll be discussing real estate investing in Austin, Texas, and bringing you experts from all different sectors of the real estate game. Your host, Jordan Moorhead, is a real estate agent and investor in Austin and is here to help you get started or to build your portfolio and explore new strategies.
Hi, this is Jordan Moorhead, and this is the Austin Real Estate Investing Podcast. Today, we've got a really special guest here for you, Mario Dattilo. He is everything mobile home park. He is in and out of the mobile home park industry, and he's got some great content on it. He's going to tell you all about it. Hey, Mario, how are you?
Hey, how's it going, Jordan? Excited to be on with you and excited about being able to participate in your show. So let's rock and roll with this.
Absolutely. Me too, man. I see you all over the internet. You have so much content out there. You're always talking mobile home park. But real quick, before we get too far into things, who are you and what types of real estate have you invested in?
Oh, geez. Who am I? That's a tough, that's a deep question. Well, so I got started in real estate in 2000, call it six-ish. I started my first business while I was in high school, which did really well until it failed miserably. And I went into just a financial ruins. And my partner and I started a mortgage company as a way to get out of those financial ruins. And in the process, we had all these clients coming to us saying, you know, I'd like to buy a house. So who should I talk to on the real estate side as an agent? We just kept hearing that over and over. And so we got together and we're like, we need to start a real estate brokerage. And I took the lead on that and became the managing partner of the real estate brokerage. So that's kind of how I got into real estate. But I live in Florida now, originally from Minnesota, and have done a little bit of everything. Originally started out in the brokerage business, then went to the home flipping and wholesaling business for many, many years until about 2013, started pursuing commercial real estate, was looking for apartments, and stumbled across my first mobile home park and bought one in 2014. And ever since, been buying mobile home parks and self-storage solely. And married, brand new daughter, first child.
Nice.
She's 8 months old. So thank you. Very excited about that. I'm a new, very mature dad. Waited a while. And other than that, just love business. I have an education business where I coach people on how to invest in mobile home parks and real estate. And other than that, just everything I do is around real estate, guns, boats, cars. That's about it.
That's you go. It sounds like you got a full life. So so I can get the timeline right. You started with a mortgage company?
Started with a marketing business, which did well and then failed. Still in so after high school, I started a business while I was still in high school, graduated high school, never went to college, and ran that business for about 3 years, and then it just crashed and burned. And then I started the mortgage company, which then kind of led into the real estate brokerage. And in 2008, went to my dad and said, look, I'm helping all these clients buy and sell homes, you know, distressed homes. And why don't we just partner up? His background was construction. He was a custom home builder, commercial construction businesses. And I just went to him and said, let's go buy some of these ourselves and be the investors too. And you handle the construction, I'll handle acquisitions, dispositions, and capital. And that's what we did from like 2008 to call it 2014.
That's awesome. So the brokerage led into home flipping. Were you holding some of those?
We held 0 homes. I've never bought and rented out homes in, over, I guess it'd be like 17 years or so of real estate and over 20 something years of business. I've never actually bought and held single family homes as rentals.
Okay. So home flipping, then you got into commercial. Did you do any other, so I know you were looking for apartments. Did you do any sort of other type of commercial investing?
So we took some education around apartment investing, and for about a year looked for, institutional quality apartments and didn't buy anything. Mm-hmm. So it kind of goes to show that I'm not a quick learner and definitely have not been successful at everything. But could not find any apartments that made sense. And then a buddy of mine came to me, who was a commercial banker, and said, look, I know this other bank that's selling a non-performing mortgage loan on a mobile home park. It's kind of like an apartment building. Would you consider buying the note? He knew that I had bought, single family loans, quite a few of them, a lot of non-performing loans in the heyday. And he's like, you could buy the note on this and foreclose on it. I did. So that's how I did my first deal. I bought a non-performing loan on a mobile home park in Naples, Florida, which was a pretty sweet deal.
Really? So you bought it in Naples and you were living in Minnesota and
I was living in Naples. So this was actually in my backyard, which is probably why I got very comfortable with it, because by that time I'd already moved to Southwest Florida, was living in Naples, and it was in my backyard. Yeah.
So your first commercial investment with a mobile home park, you also do self-storage too. So I know a lot of people are interested in both. Why self-storage?
I think what attracted us to self-storage originally was the same things that attracted us to mobile home parks. Historically do very well in rough economies. And this is going to show how horrible of an economist I am. In 2014, I was thinking about the market shifting and going and taking a southbound turn, because it felt like things had been going well for a long time at that point. And so we were already thinking about the market was trending upward for a long time. So what's going to happen when the market comes down? And so we were interested in Class B and C apartments. We were interested in self-storage, and then stumbled across a mobile home park, which ultimately got us interested in that. So self-storage, was interesting because great hedge for recessions. It has short-term leases, so you can keep up with inflation. You're on month-to-month leases with everybody. Your eviction costs are very minimal. Turnover costs are very minimal. And ultimately, it was a very niche property type that we could buy. We could buy from, mom and pop sellers who really weren't as sophisticated as the other institutional owners that own most other commercial real estate.
Mm-hmm. Okay, this is kind of off topic, but the only thing that concerns me about self-storage is it seems like it's easy to build new ones. So in Texas here, we have a ton of RV parks, and it seems like there's RV parks popping up everywhere. People are interested in buying RV parks, but RV parks scare the crap out of me because you can just pop one up anywhere, it seems like. And it seems that self-storage has some of those same issues.
Hey guys, this is Jordan Moorhead here, and I wanted to ask if you could do a huge favor for me. If you could go leave a review for this podcast wherever you're listening to it, that would really help me get this into the hands of other people that are interested in information about Austin real estate investing, and I'd be able to help more people. Thanks, guys.
It does. And that's, every time we buy a self-storage facility, we always really research very closely new permits, anyone looking at zoning changes, things like that, because self-storage is inexpensive and easy to build and easy to get the zoning for. So I agree with you. That's the risk in it. If I were to say there's one risk in self-storage, it's competition.
Sure.
Where mobile home parks, we have none, because the only competition that we really have is apartments and low-cost single family, which doesn't exist at this point. So, we really have a moat around the mobile home park world where, I would say most other property types have the same issue. You can develop, most other property types at any point. So retail, office, industrial, self-storage, RV parks, same issue with RV parks. They're very low cost to develop. They're attractive for zoning. So it's easy to put them up pretty quickly.
Multifamily. In Austin went all in on allowing multifamily development over these last couple of years. And if you're going to fix an inflation issue, like rents continue to go up, if you just increase the supply dramatically, you're going to get rents down or control the rise of rents. And Austin sure did that.
Oh, yeah. Austin had a lot of new development of apartments, and really the country had a lot of new development of apartments. And I would say that that's, in hindsight, I'm really thankful I didn't go all in on apartments. Now, hindsight also, looking back at when I was looking at them, I probably would have done very, very well on any apartment that I would have bought at that time. So, we were just being conservative and looking at current market rents, and you didn't have this huge run up in rents like what we had in the last few years. So at that time, everything we were looking at from a pretty strong risk standpoint, and had just come out of a bad recession. So everything was very cautious. You didn't have the euphoria mindset that you have in the real estate market, at least up until this year or so. So, we would have made a killing on all those apartments, but I'm glad we were conservative. I'm actually glad we got into what we did, because we stand out. We have a lot less competition than what we would have had in the apartment world in just a few years after we were looking. So, but yeah, we've gotten super niche. I would say the majority of our business is mobile home parks. We've just picked up a self-storage deal here and there whenever we found one that we could, not steal is not the right word, but distressed or really strong value add with, low occupancy or something like that, where we could buy off of a mom and pop. But generally speaking, everything that we focus on is mobile home parks, from our marketing to our management. We don't manage our self-storage, never have, where we have managed our mobile home parks.
So you've built a management side of your mobile home park business, but on the self-storage, you have a third-party manager?
Correct. Yeah, we have third-party management or co-general partners that have their own management company. So we don't internally manage any self-storage.
Yeah. Okay. That's smart.
Never have.
Yeah.
Yeah. It's, people think of self-storage as a really easy business to operate because they go, oh, it's just garage doors, right?
Yeah.
Like nothing really to manage with that. But that's actually not true. The marketing side and the competitiveness of self-storage is pretty advanced. You're competing with very sophisticated operators, so a lot of large operators in that space, and they're very technologically advanced. They're using a lot of SEO. They're using a lot of different web marketing and things like that gets the traffic. And because rates are so adjustable, everybody's using variable rates. So they're shifting month to month on what the rates are, and you've got to really be able to compete with them and know what you're doing. Otherwise they'll take your tenants. So, in that sense, I'd rather just have people who are good at it doing it than me try and be in that space. The property management business in general is not a very profitable business to be in.
No.
So if you're going to manage and not for very much profit, you might as well skip it, because if the operations of your property depend on good ops, on the management side, I'd just rather let somebody else do that.
But you do manage your own properties on the mobile home park side, correct?
So interesting. From 2014 to end of 2023, we did. And we built a management company, and beginning of 2024, we actually went to third-party management.
Really?
And yeah. And we did that mostly because, again, property management is not very profitable. Secondly, we're used to managing a third-party manager for our storage, or working with our co-general partners who have management companies, which is pretty similar. And then we wanted to just focus solely on the acquisitions and the capital. We've kind of been, I don't want to say expecting, because that makes it sound like I'm trying to be an economist, but we've kind of seen that the real estate market's probably going to slow down, probably the general economy, which we're now seeing, very evident. And we figured that there's probably going to be a big jump up in demand for affordable housing, even more than there is now. And so if we can focus on the two things that we are the best at, and let somebody else deal with the dirty daily details and just manage them closely, it would give us the upper hand to go and scale. And this actually worked out really well. We've acquired several assets this year, and we're buying at a faster pace now than we ever have, purely because we've got, I would say, not purely, a good part of the reason for that is because I'm not dealing with a management company. Even though I've never managed the management company for more than a few months myself, I've always had someone who is better at property management running that. It still flows up to me, right? If I own the management company, the internal issues of that company ultimately come back to me.
Yep.
HR issues, payroll issues, tax prep, all the accounting things. If there's issues, they flow up to me, which creates a lot of distraction.
Yep.
And so, and actually, when you think about it, where's the heaviest amount of, operations? It's going to be in the property management company, and it's going to be in the people side. We have more employees in the management company than any other part of our business. Not, our dealership, our investment company, our brokerage, our education business. None of those businesses have the number of people and moving parts going on that a property management company does. So being able to offload that was a big time saver. So, will we stay third party forever? I don't know. But for right now, it's working out really well for us and allowing us to focus on scale.
No, that sounds good. I've heard so many horror stories about third-party property managers on mobile home parks, but I have heard some good stories too.
We've never had third-party management for that reason, because there aren't many good ones out there. And what I would say is two things. Number one, management companies are not good at managing home sales and infill. Why? Because it's a lot of moving parts, and there's, especially on the infill, when you have them bringing homes in and setting them up, it's a lot of project management involved, and it's very capital intense. And so unless you really know how the funding for that is all working and can manage that properly and can have people on the ground getting those homes set up effectively, chances are you're probably going to struggle. So what we've done is more of a hybrid model. They're managing the day-to-day operations. They're doing some home sales right now, but we're handling all the home orders, setups at this point, and we'll see if they continue to do our home sales or if we'll take that back. But they're not doing everything. And also CapEx, all of our improvement projects are all done with my construction managers doing all that from the ownership side, not the property management. They do, repair and maintenance items, but we're doing all the larger projects. So it's where I've seen a lot of people, just in general, real estate in general, not just mobile home parks, where a lot of people have failed utilizing third-party management is they say, yeah, I want this manager to deal with everything.
Hands off.
And all I want to do is I want to have monthly reports. And that is a really good way to see your portfolio crash and burn, right?
Yeah,
and
absolutely.
You hear a lot of stories about that. It's because what people don't understand is that you have to manage the manager. And if you're not a good asset manager, which is very different than a property manager, you will fail if you expect that property manager to be an asset manager too. That's what people don't know, is they don't separate out the two, asset management from property management. And they give everything to the property management company, and property management companies are not going to be good asset managers because they don't optically see what's going on behind the scenes from an ownership standpoint. You're giving them ownership responsibilities when they're not an owner, and that's guaranteed to fail.
And I think you hit the nail on the head here earlier. It's not a very profitable business, and people expect them to care as much as you, the owner, care. You're making all the profit. And the property manager is essentially making a very small amount of profit and basically just getting by. They're not going to care about your asset. So you really, I love that. You got to manage the manager.
Have you wanted to be part of GoBundance, the tribe of millionaires, but just haven't hit that millionaire status yet? Well, now you can, not even being a millionaire, by joining our new program, GoBundance Emerge. My name's Jamie Gruber, creator of GoBundance Emerge and member of the GoBundance community. And now you can join. GoBundance.com/emerge. GoBundance.com/emerge. Use code Jordan for $100 off this 12-week goal-setting program and mastermind that'll propel you to being a whole life millionaire.
And they also aren't going to create the plan. What happens is you go, oh, hey, make my properties better, run them really good, right? That's what most investors do. And all they're going to do is the minimum of what they have to do, which is collect rents, do violation notices, evictions, things like that. But they're not going to put together a good strategic plan for that asset, a good business plan for that asset, and look for ways to improve it, cut costs, things like that. So a good asset manager has a solid business plan, a 3-year business plan minimum, where it breaks down not only just we're going to raise rents once a year, but all of the CapEx projections, you've performed it out, how much you should be reserving each year for each improvement. You have everything within that business plan has a name next to it and set dates of when those things need to happen by. And then you give that plan to the property management company and they see where they fit into that plan. Yes, there's going to be rent increases and notices need to go out in September for January 1 increase. There's, they have to do certain inspections, things like that. But the whole team has to be pulled into that business plan with a very clear budget and deadlines tied to it. And if you're not doing that, your management company is not going to do very well.
Sure. Yeah, I love that advice. So, we figured out why you got started in mobile home parks or how you got started, but why did you continue building a mobile home park portfolio? What do you like about mobile home parks, Mario?
Yeah. Mobile home parks are a really unique property type, and I'll start out by explaining this. You got to look at it this way. They're kind of like a hybrid between a rental model and a sales model combined. Think of it like a homeowners association with a developer builder on top. So, we own the land, the infrastructure, the common areas, any sort of amenities, but typically we don't own the homes. And with that, the residents own their homes and they pay us lot rent for having their home on our site. Now, when there's a vacant lot, we act like a builder developer and we bring in homes, we set them up, and then we sell them to a homeowner, which then starts paying us lot rent. So it's this weird hybrid model, which is partially why management companies struggle, because they're used to collecting rent, doing the rental model, but they just can't handle the operation side of the infill and the sales. And so look at it that way. What we like about it is we aren't maintaining homes. We're maintaining the infrastructure and all those common areas. Our turnover costs are very minimal, because if you think about it, if somebody sells, if a unit goes vacant, meaning it's going to trade hands, it usually goes from the homeowner to the next homeowner. And we act like a homeowners association in the sense of we just approve that buyer before they can sell their home. Then they just step in and keep paying us lot rent. So we don't miss a beat. We have no turnover costs in that case or make ready costs in prep for the new resident. We also have no downtime because it just goes from one owner to the next. That's huge. One of your biggest costs in apartments, and I'm not ragging on apartments, but one of your biggest costs for apartment buildings is your vacancy costs and your turnover make ready costs, right? So lost rent in between tenants and the cost to get that unit made ready to lease, it's huge. We don't have that in most cases. And if we do, meaning a tenant defaults on their lot rent, then we evict and we take the home, and now we have collateral. Mm-hmm. So now we have an asset that we can renovate and sell, and we, usually make up all of our back lot rent and potentially even a little bit more than that. So we can be made whole, we'll call it, on the lost rent and eviction costs, where most other property types you can't do that. We also love the fact that they perform well in, recessions and poorer economies where people are struggling financially. If you think about it, if I'm going to be positioned, let me back up. I always tell people, when you're deciding what kind of real estate you should be investing in, or any asset, not just real estate, you should think about where's the economy going, and then ask yourself, what properties would benefit from that economy that you're going into? That means the economy is going up. You'd want to be in Class A, high quality assets that people are willing to spend extra money on, right? So Class A apartments, high-end hotels, high-end retail, all of that stuff. But if the economy is going in a downward trajectory, people aren't spending extra money on housing. They're cutting costs, right? They're going to downsize. They're going to lose their homes, and they're going to need something that's a lot more affordable, right? So you want to be positioned on the affordable side of things. That means you might want to be in check cashing business. You might want to be in the pawning business. You might want to be in mobile home parks. You might want to be in low income housing. You just want to position yourself. And mobile home parks fill up when the economy struggles. Doesn't mean that we don't have any turnover, because some of our tenants may lose their jobs, but there's enough demand right behind it right behind them to move in. And because we're so affordable compared to other housing options, both rental and ownership, we're the lowest cost provider. I mean, other than subsidized housing, we're the least. So we fill up. And then I would say the other thing is we're in a consolidation phase. And when you look at different businesses, they usually go through a consolidation phase one time within a very long period of time. And what I mean by that is, let's use self-storage as the example. Self-storage went through a big consolidation. What was self-storage 30, 40 years ago? It was garages on corners, right? It was big sheds that were divvied up. And it was mom and pop owners who did this to create a covered land play. They had some vacant land and they're like, well, I'm going to develop this into something cool someday. But in the meantime, I'll just rent out some sheds, right? And people would rent those out. That's how the business started. So what happened though? The larger operators, smart investors looked and went, wow, that cash flows really well. I'm going to buy that and I'm going to make it a real business. And then the larger investors see that behind them and they go, oh, I'm going to buy up as many as I can, and it consolidates, right? So now you have all these REITs, you have all these institutional investors, private funds, all that kind of stuff that are own the majority of the self-storage. And even if it's not a large owner, it's a professional owner. It's the same thing that's happening in the mobile home park space. It's just further behind than self-storage. So you've got, 3 REITs that are in the space now. You've got a lot of private equity that's moved in and a lot of professional operators buying up these communities from the longtime owners and professionalizing them. And what's great about it is a lot of these previous owners, they didn't care about maximizing the property and the NOI because they didn't care about valuation. It was a lifestyle business for them. So for them, it's free and clear. They just make the money. They got all their friends that live in their community and they don't raise rents on them and all these different things because it's just income stream for them. Now that they're selling, they just know that they need a certain dollar amount to retire. We come in, we buy that property, we max out the NOI because we know that every dollar that hits that NOI, there's a multiple on that, right? There's a cap rate tied to that, which creates value. And so we want to maximize how much those assets are worth and squeeze every possible bit of cash flow from them for that reason. So it's just, we're in a very small window of time. I don't know how small that window is, but probably 5 to 10 years before they're mostly bought up by professional owners. And that's a very long rant, but you can tell I love mobile home parks.
Yeah. And I agree with everything you said. I think the other interesting part about it, we talked earlier about supply with self-storage, multifamily, whatever else. It's fairly easy to build. A lot of people don't seem to understand how challenging it is to build a mobile home park. Have you ever tried to build one, or do you know anybody who's built one?
I know of groups that have built them, but I haven't. And haven't even tried. I'm really not a developer by nature. Development is a business that you get rich and go broke doing, right? So, there's a lot of really wealthy developers, but there's equally the number of developers that have went bankrupt because it's a very risky business. The other thing is so you're exactly right. The other reason why they're very attractive is limited supply, actually decreasing supply with increasing demand.
Yep.
Because the supply is decreasing because they're getting redeveloped into other things. Towns have been built up around these communities when they used to be on the outskirts. Now they're in the center of town, and it's a very valuable piece of land. And so they're being redeveloped, and then zoning departments won't allow new ones to be developed. And if they will, it's still not a very attractive strategy for real estate investment. If I'm going to go develop something, I'm going to go develop something that I can lease up very quickly. I can't do that with the mobile home park anywhere near what I can with a self-storage facility, even an RV park. I can fill up an RV park in months because they just pull their RVs in, where I've got to bring in mobile homes, which is very capital intense. And then I've got to sell that mobile home to the select group of buyers at a very rapid pace. It can take a long time. There's a lot of risk. If the market tanks, demand slows down for new homes, you're just like every other developer of single family homes. You're going to sit and wait until that market comes back. So it's just never been an attractive proposition for me. And I think I'd rather go develop something else really cool than mobile home parks. I like to buy below construction value or construction cost, I should say. And it's really hard to do that when you're constructing things, right?
They're fairly expensive to build too. From what
They
I
are.
hear, I've not tried to do one. I've not looked into it. But in Texas here, there are quite a few groups that are trying to build them. And it sounds like they're really expensive. I actually heard at TexCo, the Texas Community Owners Conference, the lady asked a developer the question of, how do you get through all of the issues developing a mobile home park? And he just kind of laughed and said, we have really deep pockets. So essentially he's paying a ton of money to get this stuff done.
Yeah.
And like you said, sometimes you can buy these things well below construction costs.
Yeah, why am I going to go and try and compete just because I want the newest and prettiest? I'm really not so worried about that. It's a cash flow play for me. And, the investors in our fund are really focused on cash flow and long-term hold. They're not really looking for something to flip and big capital gains in the short term. So for us, if we can buy assets in really good locations that produce attractive cash flow, that's all we care about. It's not so much about having the newest and sexiest assets. And if it is, you're not in the mobile home park space, most likely. But yeah, I think there's in any development business, any developer is going to need deep pockets because there's recessions, there's things that pop up that can delay a project for a long time. Issues with zoning and permits and all of that, and you can end up getting pushed out for months or even years. And if you can't float that, you're giving that back to the bank.
Yeah,
so
it's not fun. No cash flow in that.
No.
So you mentioned looking for cash flow in your deals. So it sounds like, Mario, you have a fund, or that you do some syndications.
Correct. Yeah, we have a fund. It's called Equity Growth.
Okay. What do you look for in a mobile home park deal for this fund? What's the target?
Yeah, I mean, we're buying 50 or more occupied lots near major metros. They don't have to be in the metro, or really, we shouldn't even say major metros because that makes it sound like first tier, but really near civilization. So 50,000 or more populations, kind of the sweet spot. That being said, ideally public utilities. Doesn't have to be. We own some private utilities, but it's going to be price adjusted if it's public utilities. I'm sorry, if it's private utilities. That being said, we're pretty agnostic geographically. We're not buying in the communist states, so no California, no Illinois, New York, and New Jersey. But as long as it's somewhat landlord friendly and the market that individual asset is in is attractive, we'll buy there. We started out kind of farming markets and what I call the sniper approach, where you kind of pick out your market and then you just farm that market really hard. We started doing that initially, but then as we grew, we're like, we could do a lot more volume. We could buy a lot more assets if we did more of a shotgun approach, is we're going to shoot wide. And then every time a deal comes back to us, then we're going to go research that specific market. And if it's a market that we would want to own more assets in, we'll buy there. And then we'll just buy around that and continue to grow the footprint there. And that's what we've done.
Jordan Moorhead here. Really quickly, wanted to tell you a couple other ways you can keep track of us. If you want to listen to all these podcasts and ask questions, the Moorhead team on YouTube is the best place to be. And then Austin Real Estate Investors on Meetup is a great place to keep track of all of our meetups we have going on.
Awesome. So you mentioned a few states. I know you're from Minnesota, and would you buy in Minnesota? Are you looking at deals in Minnesota right now? Because they're not super landlord friendly.
Yeah, no, they're not. It's a communist state. Well, I'd call it more of a socialist state, right?
Sure, it's light.
It's communist light, right? It's communist in disguise, we'll call it maybe. So yeah, the only reason that we've bought in Minnesota, and I'll continue to look at deals in Minnesota, is I'm from there and pretty familiar with their laws, and I'm comfortable navigating it. There's also some pretty good assets there, and although they are not very landlord friendly, they're still better than in Illinois or California. When we, if they start getting into the rent control or things like that, then we're probably going to have to reassess that. But at this point, they've talked about it a little bit, and just in St. Paul, I believe.
Yep.
But I think that's gotten squashed each time that it's come up for discussion. So if they start getting serious about it and do it, then then it's likely going to spread throughout the state, and we'll probably reconsider. But
So I'm still a broker in Minnesota, so I pay attention to it a little bit. St. Paul has like a very light rent control. They've backed off on a lot of their regulation. It was the strictest rent control in the country. I think they've backed off on that now because a lot of the new builders, all the new construction left, all the new apartments said, hey, we can't raise rents with the market. We're not going to stay here. We're going to get out. So they stopped a lot of projects. The supply of new housing dropped pretty considerably, and they walked back a lot of their very strict rent control laws in St. Paul.
So I shouldn't be buying in Minnesota is what you're saying, and based on my previous statement.
Just St. Paul. I don't know about.
Still, yes.
And I don't own anything there. I'm not looking at anything there right now, but I know friends who own. I know a commercial guy who just bought in St. Paul. So, I know the people are still doing it. People are still making it happen. A relatively good economy.
I would say Minnesota's got a good economy for the Midwest and pretty strong tenant base too.
Yeah, people have good income. So it can be great.
But now you got me thinking maybe I need to go reassess that. If they've already got their rent control, then that may end up, if they're backstepping a little bit, that's a good sign. But, truth is, rent control is a failed program, and it fails everywhere that it goes, and it just ruins the economy in every market that they do it in. And that's where I'm saying, not to get political, but let's get political. I mean, you see it fail, yet you continue to pursue the same failing policies. And it just, I don't want to be in a market that people are that dumb.
I would say it's similar to buying cheap houses in a cheap market. It's in theory or on paper, it looks very good.
Yes.
So everybody that I'm sure you and I know all the same people that have bought a bunch of cheap houses in a cheap market, and they say, I'm going to cash flow 10% plus, and I'm going to make great returns, and it's going to be awesome. I'm going to be hands off. And it is none of those things. But there's always
those things. Yes.
There's always a wave of people doing it. Everybody, all the new investors come in, they think they're going to do it, and it's just this never-ending cycle of people trying to buy cheap houses in cheap markets. I think rent control is the same thing. It sounds great on paper. Hey, rents are going up too quickly. Housing is now unaffordable for people, and we're gonna do rent control. I'm no expert. It seems like it's failed the least in really big cities like New York City, where there's just a really tight supply of housing in general. But I know there's been a lot of issues there too, due to rent control. My sister, and I'll get off this tangent in just a second.
Yes.
My sister.
No, it's okay. It's a good tangent.
She lived in a rent controlled apartment with a friend in New York City. Disgusting, falling apart it was right at the post-war era apartment, and it looked like it hadn't been touched since the end of the war. It was gross, it was cheap, but that's what you get for the rent control.
There's a lot of problems in New York with landlords and tenants going on right now, and just knowing a few people that own quite a bit of apartments up there, they can't sell them. Yeah. Can't sell them, can't manage them, can't evict, can't fix them because they have no income coming in to fix them. Yeah. It's just a failed system altogether. And I just realized you live in Austin, so probably a lot of listeners have probably just checked out after Mario got bold about politics. But you know what? It's the truth.
We'll be fine. It's just real estate industry stuff.
Yeah.
So Mario,
Jordan just lost his whole listener base because he invited Mario on the show.
No, you've got a lot of good stuff to say here. So Mario, what's a mistake you've made investing in real estate? What's something you've done that you would say, hey, don't do this, or look out for these things?
Yeah. So probably, I don't want to call it a mistake, but it's something that if I was starting all over, I would do very, very differently.
Okay.
Everybody thinks that they have to do everything in a deal to make money, right? So like, for example, you say you want to go buy apartments, right? Mm-hmm. So you go start a management company, you go start buying, the apartments, you raise the money, you do everything, right? You do the construction management, you handle all of it. That's great. But what I've learned is that you're probably not good at all of them. Okay. And especially in commercial real estate, but even in residential, but let's talk more commercial real estate or business and as a whole. I would probably, instead of building out the entire infrastructure that I've built out, the management company, the dealership, the brokerage, like all these different parts of my businesses, or different businesses, I should say, I would go and find someone who's already got really strong operations. And I would partner with them and I would go source deals and I would raise capital. Why? Because that's what I'm the best at, right? And so I would partner with someone who's really strong on the ops side, and that's what they want to do. And instead of doing it all myself. And I would be much larger and probably a lot wealthier than I am today, because I would have gotten that scale, and I would probably have a lot less, brain damage from it, because one person building a large portfolio and building out the operations and all the different aspects of it can become very, very overwhelming. And what you'll see is that most people who are not extremely gifted will go up on an upward trajectory. They'll start buying, and then they'll level off. They plateau. Why? Around 4 or 5 assets, it starts to become a real business. It's not just buying property and having some investments. You actually have some complexity around the operations of what you're doing, and it becomes a real business. And so that's what I would do differently. I would not go build it all out myself. I would find someone who's good at what I'm not, partner with them. Yes, I don't make as money on an individual deal basis, but I could probably have a lot more fun doing my unique ability and scale to a lot larger size with some peace of mind of not doing things that I'm weak at.
Yeah, I love that. So, not being overwhelmed too.
Yeah, because when you get to a certain point, you start to get overwhelmed because you're making decisions about things that isn't your strong suit. Like, give you an example. People who are good real estate investors are often not good people managers, or they're not good at managing financials. You know what I mean? And you might say, wait, real estate investors should be really good at managing financials. No, they're good at finding deals, right? But when it comes to financial management and planning out your reserves and doing all the stuff that a CFO should be doing, a real strong financially focused person should be doing those kind of things. Someone who's really good at acquisitions should be doing that. You ever seen someone who's kind of analytical and nerdy have a trouble buying real estate? It's because they're not good on the people side. They're really good at running the numbers, but they have a very hard time negotiating. They have a very hard time, communicating and getting deals across the finish line because they're all in their head. They're all analytics. They're all spreadsheets. And so if you can get, depending on how wide you want to go. Do you want to build some big C-suite right off the bat? No. But if you know that you're a people person and you can raise money and source deals, then you probably want to go find the ops person and the finance person. Team up and grow it that way. If the deals are big enough. Now, can you do that with a single family business? Not without a lot of scale. So you're probably not going to do that. But if you're buying bigger assets, that's absolutely the way I would go, and start that way from the beginning. And don't partner with people that you like. Partner people who accent your skills very well. You have to like them too, but don't just partner with Jordan because I like him and we're buddies. It's because Jordan's way better at the crap that I'm not good at, right? And he sucks at what I do, so we work well together. And that's what I would. That's my advice to someone, and maybe some lessons I've learned. Now, that being said, I built it all out, so I've got the benefits of some of the other parts of the businesses that are now an asset to me. I have the dealership, so when I partner with other people now, I can bring that to the table. They don't have to build that out. But
just stay in your zone of genius is what you're saying. Just stay with what you're best at.
Stay in your zone of genius, yes.
Make sure to come check out our meetup, Austin Real Estate Investors, here in Austin. That is every second and fourth Thursday of every month.
We would love to see you there. Again, it's Austin Real Estate Investors, and you can find it on meetup.com. Love it.
Be good at what you're good at. And you'll notice that you'll have a lot more peace of mind too when you're doing things, and more enjoyment when you're doing the things that you like doing and that you're good at.
And you get so much more energy from it too. I've found that if it's stuff that I'm good at and I enjoy doing, I have energy all day long. But if it's stuff that just grinds me down, it's hard to get through. It's so tiring.
Ask me to contact the bank and get an address changed, or ask me to, go do something that's administrative. It's like I'm like, as soon as you ask me to do, I'm like, why don't I just retire today? Today is the last day of my career. I'm done. I don't want to deal with that. But, some people think you got to do all that in the beginning, but you don't if you can find a good partner that offsets your weaknesses.
Love it. Awesome advice. So Mario, how do you recommend newer investors get started? If you're brand new to real estate, you've never bought one deal, how would you recommend somebody get started that wants to build a portfolio like you have? They want to build into a big portfolio. I own hundreds of units and I've got all the cash flow I need, and it's a full-time business for me.
I would say, number one, figure out the type of property you want to invest in. We talked about how to do that, right? First, figure out where's the economy going, position ourselves to benefit from it, not just make it through it, but benefit from it. Mm-hmm. Okay. Secondly, don't think too small. A lot of times people go, I got to start out with wholesaling single family homes. And there's nothing wrong with that. Like, I'm not dissing it. It's very profitable.
Yeah.
But they feel like they have to do that to learn. Then they have to do in these small stepping stones. That's not true. I would say go big as fast as you can. Okay. As fast as you can might be different from one person to the next. Somebody might not be comfortable pursuing, 150 space mobile home park day one. I'm sitting on my coaching call today, our advisory call that I do every week with my clients, right? In my education business. And one of the guys goes, so he's talking about this deal, and he goes, it's a 256 space community, completely full, $1,200 lot rents. I'm like, okay, that's about a $30-something million deal. He's never bought real estate before. Okay. And after I answered his question, we talked through it. I said, you know what? I gotta give you a little pat on the back in front of everybody on this one. Most people don't have the guts to keep that conversation going with the seller of a $30 million deal when they haven't bought a mobile home park before. And you are, and you're actually trying to get that deal done. Mm-hmm. I'm hopefully going to partner with him on it if he gets the deal, right? But the point is that he had the guts to do it. And some people actually dropped in the chat, also clients of mine learning the same exact things. They're like, I probably wouldn't have kept going with that. Good job. Because they admit it's like too big for them, right? Mentally, it's too big for them to take on. So I'm not saying do something that you're going to crash and burn on, but whatever you're comfortable doing, go as big as you can, as fast as you can, because the real money's in the bigger deals. Okay. From a buy and hold standpoint. Now, flipping, sure. If you can make, if you can do small deals and make good spreads, fine. Like that you don't have to do large deals to flip. But some people say, well, I need to flip single family homes or wholesale to get enough cash built up to go buy and hold. You can, or you can just raise the capital, right? And I'm not saying take on money before you're comfortable, right? Some people would say, no, you need to invest your own money, build the track record, know what you're doing before you take on other capital. For some people, that might be the case. I've never bought a commercial property with all my own money. Every single deal I've ever done has had partners. So I've raised money since day one, right? Mm-hmm. So I would say look at the scalability of raising capital and go as big as you can, as fast as you can, because what most people think is buying small is safer. For buy and hold, it's actually way riskier. What do you mean buying smaller is riskier? There's less money on the table. Yes, but you're diversified across less tenants. Mm-hmm. So you have one tenant is the riskiest.
Yeah.
A lot of times, and not to go down rabbit holes here, but people say, oh, I want to buy single tenant, triple net leases. They're the safest deals because they're backed by credit tenants. I'd argue that they're not the safest. And the risk does not, the risk does not justify the cap rate, because, or vice versa, the cap rate does not justify the risk, because if that business goes out of business or pulls back, you go from 100% occupied to 0% occupied overnight. And on top of that, it's likely been customized for that tenant. So there's a lot of risk in single tenant buildings, but people for some reason don't see that because they're backed by larger companies often, and they're triple net, so they're lower headaches, and they figure that business is just going to handle the expenses. So I would say that go as big as you can. Multi-tenant is ideal, and don't be afraid to raise money, but get educated. Like, I can't tell you how many times, like, and I'm not picking on people, but when you have an education business, people come to you and they go, hey, I'm interested in learning. And then they find out that there's an investment, which any education, good education, should come with an investment. They go, oh, I'm just going to do it on my own. Well, the problem with that is learning from YouTube, Instagram, TikTok, you just can't get books. You can't get enough information to make large investments. And you definitely should not be taking other people's money to invest if you are not very knowledgeable about what you're doing. So, you get kind of the do it on your own, self-learning people that either never get a deal or they do a bad deal and they crash and burn on the first one. And so just get educated. That's not a pitch, but you should learn from people who have already done it and have done it for more than 5 years or more, but really 10 years or more is the safe sweet spot. Because think about this, Jordan. If I've been investing in real estate for 5 years, what have I really experienced?
It's just up and to the right. I mean, that's my investment experience started in 2016. And yes, similar to what you said, everybody thought the market was about to crash. But yes, I started buying and everything just went up and up and up. Lucky
and so,
for me.
and the thing is, that's great. If somebody's never seen, Helen Brimstone or whatever, like just, a burning market, that's good because you haven't felt the pain yet. But you shouldn't be learning from someone who's never been through a market cycle before, because they don't know how to advise you on when things start to go south. They've only been in an upward trajectory. So, there's nothing. Which
is most people that are out there talking right now. And I think it's easy to remember, we haven't had any sort of turbulence since, 2010? 08,
really, 08 in the residential, 10 in commercial. Yeah.
Yeah. But it's been so long that everybody you're talking to started investing after that or right around that time. And not everybody, but
there's not a lot of people who have been through, there's not a lot of people who have done deals when everybody's losing their properties.
Mm-hmm.
And that's a different market. Everybody goes, buy when it's low, sell when it's high. Do you know how hard it is to buy when it's low? Do you know how scary it is to buy when it's low? Like, the mental part of buying real estate at the bottom is difficult. And that's why most people don't do it. They say they're going to do it, but they buy at the top or when the market is going well. And when the market is falling, everybody's going, whoa, I'm not touching that. And it takes balls to get in and start buying things when everybody won't touch it, when lenders won't touch it, when owners are trying to just get out. It's a very scary time. I remember buying in 2009 and we were extremely cautious. Now you might say 2009, geez, you could have bought anything and quadrupled the value of that property.
Yeah, but you didn't know.
It's true. You don't know.
You don't know if it's going to keep going down. I think that's the hard part about buying and what feels like a down market. And we've experienced that a lot here in Austin over the last 18 months or so. And everybody said in 2021, I'm waiting until the prices go down. Now the prices have gone down and nobody wants to buy. So I'm seeing it firsthand. And
it's exactly what I'm talking about, because you don't know where the knife's going to stop falling, right?
Yeah.
And you don't know when it's going to come back. In 2009, 2010, we're like, is this market ever going to come back? It's just dead market. People wouldn't touch the homes that we were buying. And so it takes a little bit different mentality. A true contrarian is rare. It's really rare. So get with people, get educated by people who have been in it a long time. And you're right, there's not many.
Yeah, it's challenging. I think you mentioned it briefly too. Is the next challenging part is getting lending at attractive terms when things are going sideways.
Now, let me ask you this. When is the best time to buy? When it's hard to get financing because you've got no competition, right? So if you've got dry powder, a lot of cash, you're golden.
Great,
but you got to have the guts to deploy the cash into the market and you have to be confident enough that you're buying at a price that you're going to that's going to be attractive down the road. And so the creativity side of it really comes in. Any deals that you can be buying right now when lending is not real attractive and interest rates are high, if you can make the numbers work and you can use good, solid, you can get good, solid financing, whether it's bank or seller, you're going to do well on those deals. I looked at a chart that was stating that they anticipated interest rates being at 5.75 in Q4 of 2025.
That'd be good.
So everything that you bought at, that required a 7 to 8% interest rate and cash flowed, imagine how great that's going to cash flow with a significant decrease in interest rate. Now, I don't know if that rate is correct. It seems to me a little bit aggressive, but the point is the best time to buy is when other people can't buy, but most people don't buy then. So, because it's scary.
Yeah, I love it. So I know
it's risky.
Yeah, but risk has reward at the same time. And I know you have some educational businesses too, Mario. So you do some coaching on the real estate side. What's that look like? Yeah,
Real Cash Flow. Getrealcashflow.com is the website, but it's basically education strictly around mobile home park investing. And I've been buying mobile home parks for over 10 years now. And so I never really wanted to get into the education space because I'm too busy running businesses, but I do enjoy teaching. And I've always had that mindset of, am I really an expert? Am I really an expert? And at around year 8, I started to go, you know what? I feel like we really know what the heck we're doing. Do we know everything? No, you never do. I still learn every single day. But we've seen a lot of scenarios. I've also been through a market cycle and been investing in a down market, right? So I felt confident enough to where I could educate students on how they could go and replicate what I've built and hopefully even exceed what I've built. And so it's all around the mobile home park investing space. And it's a pretty advanced program. It's not like go to a class one day and or 2 days or watch a few videos. It's an entire year program with hands-on coaching and all of that. So
that's awesome. And that's getrealcashflow.com?
Yeah, getrealcashflow.com. Yep.
Okay. Well, man, that's great stuff. Do you have any sort of books or podcasts or YouTube channel that you recommend for people looking to learn about the mobile home park space? I know you have a good YouTube channel I've watched quite a bit of. What's that called
again? Thank you. Yeah, it's mariodattilo.tv.
Okay.
Pretty easy to find. mariodattilo.tv. And it's all about mobile home park investing. I do have a podcast as well, but that's a little bit broader. That's more commercial real estate and entrepreneurship. And so if you're looking to learn about other real estate types, obviously you've got a great podcast here. And you talk about a lot of different property types and things like that. Mine's similar, commercial real estate specifically and entrepreneurship broadly. So
awesome.
That's MarioDattiloShow.com. So very, very easy to find.
It's a good brand unanimity. So you're MarioDattillo.tv, Mario Dattilo Show. Do you have just a general website? GetRealCashFlow.com.
MarioDattillo.net.
MarioDattillo.net.
Yep.
Awesome. Any other great way for people to get a hold of you, Mario?
No, I'm on all the social media platforms, and I'd love to just add value any way that I can. If you got deals you want to partner on, or you want to connect in some way, shape, or form, I'd love to connect with other people in this space. And being on a show like this is always a pleasure. And being able to hang out with sophisticated guys like you is just why I do these. This is fun for me. So I want to definitely get you on my show soon, and let's talk real estate there too.
Absolutely. Let's do it. Thank you so much, Mario. I really appreciate it. I know everybody's going to get a lot out of this. GetRealCashFlow.com and Mario Dattilo everywhere. You can look on social media. We'll have all that stuff on the show notes here too.
Cool.
All right. Thanks, man. Have a great day.
Thanks, Jordan. See ya.